Hey everybody, Preston Bryn here with our trader user group. This is for the trading week ending October 30th, 2015, last trading day of the month of October. What I've got on the screen here is a daily chart of the E-mini S&P 500 futures. And you can see we've made a great comeback since a little bit of a double bottom test here in August, going back and then doing a retest back towards the end of September. I believe based on this right here, now these are closing prices. This was just an intraday hard move down on the 24th when I think most of the children got scared. But basically we had that big bullish divergence here, and you could see we were off to the races right here. You know, and our members, I was suggesting we get long right in this area here, and we've been long and just been enjoying it. Although I think the time is coming now where getting north of this area here is going to be relatively difficult to do. Just a couple of things to kind of set the stage here. For 2015, you can see this line here. It separates 2015 and then prior years. So in the year of 2015, we've had a couple of support points. At the beginning of the year, it was this area here, and then we've kind of just disregarded it since. And then you can come over and see this area here. It's a little bit of a zone, roughly around 2040 down to this area here around 2032, roughly. And we've blown through it. We've also blown through the 200 EMA, that would be the yellow line, and then the 50 EMA, that would be the red line. We had this death cross right here, which really did scare the children because we were down in this area here, and I think most people on this move up here was playing for it to come back down in this area somewhere. So were we. As soon as we came down here, and then we got a trigger on a bullish divergence play here, I had told my group, I said, we can expect a pretty good little run up. And if we can clear this hurdle right in this area here, a little bit of a zone where we hung up for about a week or so. If we clear that, we're off to the races. The interim stop would be the 200 in this little area right here, which was this basically the support where the market action found itself for most of 2015 on the downside. So now we're up in this area here. Now, 2055 was the opening price of the E-minis for the year, you know, coming all the way back over here like this. Right in that area there is where we opened the year. So we're not that far off the open with all of this big crazy move. We're pretty much right back where we were right here before we started that big move to the downside. Can it happen again? Yes, but I don't think we're going to get that kind of action here. You can see the upward trajectory right here in the 50 EMA. The 200 EMAs actually started to turn north as well. Should they keep this up, I think we're going to have a cross sometime in the next couple of weeks back to the upside again. I think any pullback here, which I would not be surprised, taking us back down to the 2040 area, maybe as low as 2030. Again, I would not be surprised. I wouldn't expect that to break. If it does, 1992 is a key support area. Right in this area here. So we got a couple of areas that we can watch. One is this little zone here, 2040 to 2030, and then 1992. Okay, I believe this would be kind of like the area that would, you know, hold it up and provide pretty good support at that area there. Should we get down there, I'm not certain that we're going to get that far down, but I do. I would expect a little bit of a lightening in the load, a little bit of profit taking in this big move up. I mean, that's just something that, to me, would not surprise me at all. In fact, I would expect that to happen. 2134, that's the high for the year. I don't know if we're going to see that before the end of the year. I really don't. I'll quote some stats for you. The month of October, we had, you know, about a 7% gain or so in the S&P 500 futures. And going back about 40 years, every time, generally November, December traditionally are a strong time of year for the U.S. markets, kind of a season-ending Santa Claus rally kind of thing. But anytime statistically October has been a very strong month, then the November and December months average around 1.5 to 2.3, 2.4%. So that would suggest that the upside, if that's the case, if statistics hold true, right? Because right now we're sitting at roughly 2074. If stats hold true, then that would put us right at around 2115, 2120, which would then not take us up and take out 2134, assuming the stats over the past 40 years hold true for this November and December. Okay, now I would expect a little bit of a pullback, and if I were to run a Fibonacci down here and just say what would be a common retracement point on here, I would say that a pullback, again, surprisingly, surprise, surprise, here's a fib node sitting here right around 2040, and if I were to extend this over, you'll see it runs right into that major support point that we spent most of 2015 in. Every time we came down, we bounced up. So I would not be surprised to see us come right down to that area, and by then the 200 EMA will be right up in this area here. The 50 EMA will be up in this area right here. So we've got a lot of support should we break this 2040 area before we come down and test this 2006, and just below that is the hard price action of 1992. So that's why I believe we got a lot of support underneath us, and I'm not going to be adding any longs coming into Monday or Tuesday. I'm going to look for a little bit more of a pullback, and then once we, if not when, but if we see a move up and we get a trigger, then I'm going to say let's go long, because I think we'll come back and take out this number right here and head up north of 2100, probably around 2120 area, going into November, December, and it could get choppy. Now, the markets are really cool for trying to break records and then backing off again. So if we do come back up to 2134 and blow through it, I'm going to look for a quick reversal just to say, hey, we made a new high, and then boom, we're coming back down again. Okay, so most of this conversation is centered around the markets kind of stabilizing and moving higher. Let's look at it from the other side, and then the risk of that happening. If we look at the markets, and let's say we break down and we come down to this 1992 area, which is right around here, because this is a pretty good hard stop. It was the area that we had right here. And let's say we do one of these kind of things, and then, next thing you know, we're right here, and then we're starting to move up, and then it fails, and we come back down, and then we break right here. Okay, I do believe if we break that area, then we're susceptible to coming back down and testing this area all the way back down here again. Okay, and I know it's a far stretch from here back down to here again, but that would mean that there's a big capitulation in this market. Sellers are jumping back in, and then we're going to come down, and then everybody has their eyes on this area down here for a double test, right? And then that's what everybody's going to watch. And then that would be that type of scenario. I do believe that the higher probability scenario is we get a little bit of a light pullback, a little bit soft in numbers, price action over the next week or so, and then we springboard higher. It may take a week or so to get back up to this area, assuming we pull back, and then we'll find ourselves north of the 2100 area, but south of the 2134 area. Okay, so that's kind of how I'm looking at this right now on this daily chart. Okay, now I'll put all my indicators back in, and you can see what I'm showing here on this chart, and all of these just kind of support each of those levels that I was talking about. Now, what market was really strong from Thursday and Wednesday, Thursday, Friday coming in until today was the Russell and the mid cap, the small cap and the mid cap. You can see on the Russell, on these futures here, I'm going to leave all my price levels and stuff and drawings on the chart. You can see we had a perfect, just about a perfect double bottom test. We had that beautiful bullish divergence. We got a signal here to go long, and away we went. You can see the 50 EMA, and that's just about where we're sitting right now. We cannot seem to get the escape velocity to take out that 200 EMA. Again, like the E-minis, we got that death cross right there. 1203.90 is where we opened the year for the Russell futures, and it looks like it wants to roll back over again. Remember, we cannot have a good sustained rally in the E-minis or in the Dow unless we get follow through with a small cap and mid cap. This is a small cap generally considered with the Russell, and we need to see money flow in here. Until we can take out both these guys here, both the 200 EMA and the 50 EMA, and then past that psychological barrier of the opening price for the year so that we can go back into the green, I think the market's going to stay depressed. We may stay elevated in some of the indices. We may even stay above the opening price of the year on Nasdaq and the others, but it's going to be very difficult to maintain that. So we do need to see participation. So I would definitely put your eyes on the Russell to just see what the rut does. Again, we want to see participation in the rut. The other one that we want to see participation in is the mid cap, and we can do that with MDY. You can see MDY, actually it fell today, not as much as the Russell, but it did fall. And if I blow this up, you can see the opening price for the year, 265.28. You can see, let me just widen it out so you guys can see the screen a little bit better. You can see that yellow line, which is the 200 EMA. I mean, we just can't seem to get up above it. It's kind of like the 50 EMA for the rut. But you can see right there, 3 days, we go up, we try and touch it, and we back off a price. Here's the 50 EMA. It's starting an upward trajectory, look, which is good. Again, like the Russell, like the Dow, and like the E-minis, we had that death cross. We're still below. We're in the red. Both on the Russell and the mid cap. We need to see participation in the mid cap as well, folks. Otherwise, we're going to come back down. Now, if we see softness in the E-minis, we're going to see softness everywhere. I can expect a test of the 50 EMA in the mid cap. Okay, but we need to see this thing punch through, get back into the green for the small and mid cap for the year, just to give a psychological boost to the rest of the market. Otherwise, we're not going anywhere to the upside, and the near-term risk is down. Okay, so that would be the mid cap. And then if we take a look at Nasdaq Futures, which has been the best performer for the year, you can see with the Nasdaq Futures, I'm going to show you guys something here. The high for 2015 was 46.86 right here. And then right here, today, we moved up to 46.90. We made a new high today, right? And I'm just going to move that over just like that so you see it, 46.90. So we moved up and we actually made a new high in Nasdaq. It kind of snuck in there without people really watching. So it was a new high in the Nasdaq. You can see the opening price of the Nasdaq for the year, 42.40, but it made this new high. Again, I think we're going to come down. We're going to see a little bit of softness and test this area here around 45.51, but I think it's going to hold up there. The other thing is I'll exaggerate the screen here so you can see it, because if I do it normal sizing, you wouldn't be able to see it on yours. But you can see we had a death cross right there, but within about 2 weeks, we crossed right back to the upside. You can see the trajectory on both the 50 and the 200 EMA are very steep, all right? That tells me that I think NASDAQ is getting a little bit ahead of itself. I mean, we had strong earnings from Microsoft and Google, and, you know, they kind of took off Amazon as well. So that kind of provided some of the impetus to this big move up and to actually take out the 2015 highs. And you probably never would have known that today we made new highs in Nasdaq Futures. But then it, like most markets, it sold off and then boom, we're back down here again. So I do believe that we'll probably start off slower momentum into the beginning of the week this coming week. And then we can look for that halt to be arrested and then moving back up. Now, that would be the favored trade. Of course, we can just immediately reverse and go hard up on Monday, but the favored trade is to fade this little bit of a push up that we had. And even though today the Russell was down about 3.3, the E-minis actually fell more than the rut, which is a good thing. It was down about 9 points, right? So it fell a pretty good bit. So I want to see where we're going to end this, up. But you can see this big move here. So these are the major indexes that I'm watching. And then the final one, of course, is the Dow. I want to see participation in all these guys. The Dow was the worst performer. And if we look at it, you can see here, we went right up to the opening of the year for the Dow, and then we went right back down again. 17,781. The Dow Futures, we could not clear it, and then it was like just a roadblock, a stone wall. We hit it, we backed off. That's that blue line there. That's the opening price of the Dow for 2015. So I think we're going to have a little bit of weakness to the downside, and then we're going to gather our thoughts, and then we're going to make another run at it. And that second run, if we break it, then I think we're going to run up into this zone up here and get stuck. This red line is the high for 2015 for the Dow Futures. Okay, so that's kind of where I'm looking at it right now, guys. We've had a great run in the month of October. You can see this just a huge bounce off the bottom here. We've done very well. For those of you following along, we've had a really good October, a great October. Tripling the returns that these guys have done, in some cases even more. But it's been a really good run here. So that's where I'm looking now. Now there's a lot of other things we got going on in the currencies market, in the energies market, in the agricultural market, and some of the key sectors. We got some things going on. We're playing a couple of things that are coming up. So if you're not a member, I highly encourage you to come on in and join us. We had a good year. I think 2016 is even going to be more interesting. We got some really good longer term trades that are going to be setting up in the commodities market, so we want to follow those. And again, if you're not a member, I will be doing a free session on December the 5th, Saturday. I'm going to send more information out that on an email shortly. It's going to be for those of you in the New England area. We're doing an on-site about a 3.5 hour presentation. So you guys certainly welcome to come and join us there. We always get a nice little crowd. Otherwise, you can join us. I'll try and patch you guys in on a webinar if I can make the technology work. So we'll see. Otherwise, have a really great weekend, everybody. Got a lot of activity for our members. I will see you guys this Thursday night or this Sunday night for our weekly market watch coming up. And do not forget to set your clocks back an hour, at least most of you, early Sunday morning, 2 a.m. Sunday morning. Have a good weekend, everybody. See you guys, see you members Sunday night. Bye now.